Hey, what's going on? Friday wrap-up time. Thanks for tuning in. Sorry I missed you last week. Was out of town at a coaching event. More of the same on rates. Hasn't really changed much. If anything, we've lost a little bit. Let me get myself out of the way. If you're new to this series, this is where we were end of February, the Friday, February 27th, right before we started bombing Iran. Oil prices took them higher because this chart is inverted. The lower this goes, the higher the rates. So we are trying to get back to where at least we were a couple of weeks ago. We got a lot of headwind, meaning all of these squiggly lines are moving day averages that become resistance for us to get lower on interest rates. So this is Wednesday. Once again, Jerome Powell, the federal chairman, did us no favors. Was pretty negative on the outlook. Some of the dialogue that happened during the Federal Reserve meetings, there was 2 days there, didn't help either. So we did push through literally in the last minute or so above this moving day average. Now we're up against these two, which are going to become a double layer. If we can get some momentum, we've got a chance. I mean, it's going to take a while to get back where we were before. Obviously, the Iran thing needs to be figured out. But here's the bottom line: it doesn't matter what the rate is. People are still going to buy a house. Unfortunately, our buyers, our potential buyers, are inundated every single day on social media and in the media. Rate. We've got to get them off of that conversation. Talk about payment, because you and I both know we can manipulate the payment with seller credit, paying points, temporary buy down, whatever it may be. So let's try. We got to fight the good fight. We got to undo the brainwashing, if you will, to at least start conversations. I'm happy to come alongside you and back up everything you're telling them, because sometimes with a buyer, a random third party like myself that validates what you're saying helps convince them. Also, wanted to share a quick tactic I've been hearing about from some top producing agents. They are going back to their past clients that bought in 2020, 2021, maybe the first half of 22, and finding out if they are in their ideal home. Not everyone is in their ideal home. Obviously, in some cases during COVID, the house picked them. They did not pick the house. So it's an opportunity to have a conversation with them to find out if they are or not in their ideal home. Now, here's the tactic. Most buyers obviously don't want a higher interest rate. They're at 2.5. They have all this debt. They can't afford 6.5. Well, what we can show them, what we can tell them is, if we can get your overall debt at the same, if not below what you're paying now, would you be interested? Most of the time they're going to say yes, because it's not about the rate. It's about the fact that they've got all this other debt. Well, if we can sell the house, take some of the equity they've accrued over the last, 4 or 5 years, 6 years now even, pay off the debt, they can afford the higher payment on the house, either downsize with a high rate, upsize with a higher rate, whatever, but getting that debt paid off is a big win for everyone involved. So if you want to have a conversation about that further, let me know. Otherwise, just keep on fighting the good fight. We'll get through this. I think the rates are the rates. We just got to keep our head down and find the buyers that want to buy. See ya.